XRP has always been one of the most intriguing cryptocurrencies in the market. Its cycles, surges, and crashes have fascinated both retail and institutional investors for years. You've probably seen the headlines: massive gains one week, steep pullbacks the next, and endless debates online about whether now is the right time to buy. For investors holding $1,000 or more, the question becomes even more crucial. Where should that money go, and what are the factors that could determine whether it grows or shrinks over the coming months? While many are hoping for quick gains, the truth is that XRP requires a careful, strategic approach, and understanding the broader market forces is key. Recently, investors have become increasingly confident that the Federal Reserve will implement another interest rate cut at its meeting later this month. Lower interest rates have historically been one of the biggest catalysts for bullish sentiment in both traditional and crypto markets. For XRP, this could mean a favorable environment for growth. Yet, despite these expectations, we haven't seen sustained bullish momentum. Bitcoin, Ethereum, XRP, and other leading tokens have experienced notable pullbacks, reminding investors that even seemingly positive news doesn't always translate into immediate price surges. This is where strategy comes in. The $1,000 question isn't whether XRP is promising. It's how to approach it in a way that balances opportunity with risk. Historically, pullbacks in XRP have often served as strategic accumulation phases. Investors who understood the patterns, watched the on-chain activity, and positioned themselves gradually were often rewarded, while those who chased hype ended up buying at peaks and selling at valleys. It's not a game of luck, it's a game of timing, research, and discipline. Let's take a moment to visualize what $1,000 invested in XRP could look like. Imagine splitting your investment into multiple entries instead of buying all at once. By doing this, you reduce the risk of buying at a peak and allow yourself to take advantage of market fluctuations. It's a classic strategy in volatile markets, and it works particularly well with XRP. The market has a way of punishing impulsive decisions, but it also rewards patience and insight. A measured approach could turn that $1,000 into a much more significant position over time, especially if XRP experiences a recovery cycle. Many retail investors get caught up in FOMO, the fear of missing out. Social media buzz, headlines, and skyrocketing prices can push people to make decisions without fully understanding the context. XRP has a history of dramatic swings that can trigger panic selling or euphoric buying. Understanding the difference between reacting to hype and making calculated moves is crucial. Tracking macroeconomic signals, regulatory news, and adoption trends gives you a clear edge over those following emotion-driven impulses. For instance, consider the influence of the Federal Reserve. A quarter-point rate cut may sound small, but its implications ripple across all financial markets. In crypto, lower interest rates can make riskier assets like XRP more attractive, but it's rarely enough to create a sustained bull run on its own. Investors need to combine this information with other data points, such as liquidity flows, whale activity, and the token's real-world adoption, to make informed decisions. Understanding these dynamics can help you position your $1,000 investment more effectively, turning uncertainty into an advantage. XRP's cycles are unique. While Bitcoin often drives the broader market sentiment, XRP sometimes moves independently based on legal developments, banking partnerships, and adoption news. Observing these divergences can provide critical insights. For example, while Bitcoin may be experiencing a minor correction, XRP could be in the accumulation phase, offering opportunities that aren't immediately apparent to casual observers. Paying attention to these subtle differences can make the difference between strategic gains and missed opportunities. Let's bring this closer to home. Imagine you're a retail investor watching the price of XRP fluctuate daily. You notice a small drop over several weeks, news of a potential Fed rate cut surfaces, and there's chatter about new banking partnerships using XRP for cross-border transactions. Instead of rushing in and buying everything at once, You start to allocate your $1,000 in measured increments, keeping track of news, whale movements, and social sentiment. By the time the market begins to shift upward, your position is optimized to benefit from the recovery rather than being caught flat-footed. One common mistake that many new investors make is ignoring the importance of historical cycles. XRP has had numerous peaks and valleys, and understanding these patterns is essential. For example, after the 2017 crypto boom, XRP experienced multiple pullbacks that lasted months. Investors who understood the cycle bought during dips, held through volatility, and eventually saw substantial returns. Those who chased the highs often suffered losses. The lesson is clear: history doesn't repeat perfectly, but it often rhymes. Recognizing the rhythm of XRP cycles can guide your $1,000 investment strategy. There's also the matter of alternative investments. While XRP presents opportunities, comparing it to traditional assets like stocks can be enlightening. Take the Motley Fool Stock Advisor as an example. Historically, investing $1,000 in recommended stocks like Netflix in 2004 or Nvidia in 2005 would have yielded returns in the hundreds of thousands or even over $1 million. These examples illustrate the potential of disciplined, research-based investing. While XRP is not a traditional stock, the principle remains. Informed decisions based on data, trends, and cycles outperform impulsive moves. Another factor to consider is real-world adoption. XRP isn't just a speculative token. It's actively being used for cross-border payments and by financial institutions in various countries. These integrations are subtle, but they matter. Adoption trends can influence long-term value in ways that daily price charts may not capture. Paying attention to news about partnerships, regulatory developments, or institutional interest can provide actionable insights for your investment. For a $1,000 position, these signals could determine whether you adjust your allocation, hold steady, or even add to your position. Risk management is essential. Many retail investors make the mistake of putting all their capital into a single purchase during hype cycles. With $1,000 to invest, consider diversifying even within crypto. Splitting between XRP and other high-potential tokens can reduce volatility risk while keeping exposure to growth. Additionally, staggered entries allow you to buy in at different price points, smoothing out the impact of short-term fluctuations. This approach transforms a high-risk investment into a more controlled, strategic position. It's also important to manage expectations. Even if all positive catalysts align, rate cuts, adoption news, and bullish sentiment, the market may not respond immediately. External factors such as global economic uncertainty, competing crypto trends, or sudden regulatory news can delay or dampen gains. Planning for different scenarios and understanding that volatility is part of the journey will prevent rash decisions that could jeopardize your $1,000 investment. Let's talk about timing and observation. XRP cycles are not random. They follow a rhythm influenced by accumulation, hype, and profit-taking phases. By observing trading volumes, wallet movements, and social sentiment, you can anticipate potential turning points. This doesn't guarantee success, but it provides an informed foundation for strategic decision-making. For a retail investor with $1,000, even subtle insights can significantly improve the outcome. Now consider a vivid analogy. XRP cycles are like ocean tides. Waves rise and fall, currents shift, and timing your swim is essential. Jumping in at the wrong moment can result in losses, while understanding the flow allows you to ride the wave effectively. Similarly, informed observation, gradual investment, and awareness of market signals turn volatility into opportunity. Your $1,000 isn't just money. It's a strategic tool when used wisely. Whale activity is another aspect worth monitoring. Large investors often move quietly, creating subtle market signals before major shifts occur. By tracking exchange inflows, wallet balances, and unusual trade volumes, retail investors can gain early hints of potential movements. Your $1,000 position can benefit disproportionately from recognizing these signs early, allowing for better timing and allocation decisions. Forward-looking trends also matter. Regulatory clarity, increasing adoption, and new financial partnerships can all influence XRP's trajectory over the coming quarters. Staying informed and adapting your investment approach based on credible data ensures that your $1,000 is positioned to capitalize on emerging trends rather than reacting late to market hype. Information itself becomes leverage in your investment strategy. Practical steps for a 1,000 XRP investment include researching historical cycles, monitoring regulatory developments, observing whale movements, staggering purchases, and tracking adoption news. Diversifying across complementary cryptos and holding with patience reduces risk while maintaining exposure to growth potential. Above all, avoid impulsive moves driven by social media or hype. Strategic patience beats reactive trading every time. By now, it's clear that investing $1,000 in XRP requires more than luck. It demands observation, research, strategic allocation, and awareness of both macro and micro factors influencing price. The Federal Reserve's upcoming rate cut, while potentially positive, is just one of many signals to consider. XRP's adoption, whale activity, and historical cycles provide actionable insights that can guide decisions. Strategic patience and informed action turn volatility into opportunity. If you want to track your $1,000 XRP investment effectively, welcome to XRP Daily Brief, your daily source for XRP news, cycle analysis, and actionable insights. Our goal is to help you navigate volatility with clarity, positioning you to take advantage of cycles rather than being caught off guard. By staying informed, you can make decisions that are grounded in data and trends rather than emotion. The broader lesson here is timeless. Markets fluctuate, but informed investors find opportunity amid volatility. Whether it's XRP or another asset, understanding cycles, staggering investments, monitoring adoption and regulatory news, and observing key market signals transforms risk into potential reward. Your $1,000, when managed strategically, can grow in ways that impulsive decisions rarely achieve. Patience, observation, and research are your most powerful tools. As we wrap up, remember this: no investment is without risk, but a disciplined approach rooted in research, data, and strategy positions you to make the most of your $1,000. Watch XRP's cycles, pay attention to adoption trends, monitor whale movements, and adjust your strategy as credible signals emerge. By doing so, you align with the same principles that have historically produced success in both crypto and traditional markets. For those ready to take action, subscribe to XRP Daily Brief. Stay updated with daily XRP insights, cycle analyses, and practical strategies that help turn market fluctuations into calculated opportunities. The knowledge you gain here isn't just information, it's leverage for your investment decisions, not professional advice. Consult a qualified expert as needed.